think if the energy markets continue to tighten like we're seeing across the globe, there's every chance that we could see oil in three figures. But I do feel like we would start to see a supply response after a couple of months of this disruptive sort of output, particularly from the US. We're seeing actually quite strong pickup in drilling activity, particularly from the private sector there, and that's going to eventually flow through into stronger output for US shale oil in particular, but also the recovery in supply we're seeing from the Gulf of Mexico after those hurricanes. But yeah, certainly the markets are pretty tight, and I think if we continue to see gas to oil switching, particularly through Asia, where the energy crunch is at its greatest, then we could see very strong demand come through. I think where we're actually forecasting probably additional 450,000 barrel a day rise in demand from our previous forecast for Q4 as a result of that gas to oil switching. So if that continues to play out, particularly over the entire sort of Northern Hemisphere winter, then certainly there's plenty of upside left in oil prices.
Daniel, I also wanted to ask you about the outlook for China here, because China is facing its worst energy crisis in a decade. We're seeing significant power rationing in some key cities as a result of fuel shortages. What triggered this in your view, and how do you expect this to play out?
Yeah, look, it's a combination of a couple of things. I mean, clearly we've had relatively low output from hydropower as a result of dry conditions earlier in the year, but also they've had to close a lot of smaller dams as a result of previous sort of issues. So that has really weighed on overall electricity output in that country. And unfortunately, the growth in investment in other renewables hasn't taken up the slack. Now, at the same time, you aren't seeing the investment flow through into the coal and LNG markets as well. So supply growth out of those markets has been relatively low. So that's really constrained the supply side, but it's also the decarbonisation and the electrification of the market, which is really exacerbating that growth in demand. Now, you're seeing electric vehicles put onto the electricity grid. You're seeing a lot of heating and power pushed onto the electricity grid in China as well. So, the growth in consumption of electricity is significantly higher than underlying demand is as well. So, that's really created this crisis, which is going to take quite some time to rectify. And I think that's why we're seeing Chinese authorities really push for utilities to secure supplies at all costs, because it is eventually going to hurt industrial production if this continues.
And I think this is interesting coming into COP26 as well, because some say the crisis that we're seeing in the energy sector right now really exposes the pitfalls of moving away from fossil fuels before renewable energy sources are at a maturity point where they can actually provide the right amount of alternative power. Is this what the new normal looks like?
Yeah, I think people were expecting to see a relatively clean transition, but it's going to be a very bumpy ride if this is any indication. Certainly, the investment in renewables needs to continue to grow very strongly, but we also need to see the other sectors supported as well. And I think markets like LNG are going to become even more critical as that transition fuel to sort of smooth out, I suppose, the issues that we're seeing in those markets at the moment.